Hi guys, and welcome. This is the first video that I'm basically starting on TradingView. So bear with me. I'm going to test out this the service. Obviously, it's been out for a little while, but looks like a good way to communicate. And all right, so let's get going. The idea of this video is basically to go through where we are at the moment on the crypto market, but when I say the crypto market, I'm not going to be looking at altcoins and stuff like that. I will be bearing attention right now and focusing my attention on the majors, the Bitcoin and Ethereum. For those of you who are in the crypto market for a while, you know that the importance of these major cryptos, the Bitcoin and the Ethereum, these big caps, is essential for the rest and for the rest of the market. And obviously, I don't trade that much the Bitcoin. As a matter of fact, I haven't been trading the Bitcoin in a very long while. Ethereum, I've been trading for sure, because personally, I think that at some stage we will probably get Ethereum market cap going over the one of Bitcoin. That's my own personal idea, and we'll see. Time will tell. But the one thing for sure is that I base a lot of my interventions in the altcoins on the basis of what the majors are and where my points of major resistance and support are going to be. Whenever I see a major point of resistance and support, or where I feel that basically the market may get heavier on the Bitcoin or Ethereum, then that means that that will dictate what I will do eventually in the other projects that I like, being some of the other projects that I trade on the altcoins, or like Solana, EGLD, AVAX, etc., etc. The list. I've got my hot list of some of the names that usually I follow. About I'd say 20 names or so, out of which basically I will decide when to intervene. But a big part of my analysis will start with the majors, Bitcoin and Ethereum, because I really do believe that they give the entire feel and temperature for the rest of the market. And if we get that right, then that means that we can get also good timing on the other projects that will follow through. Um, Usually, you'll get a drop of 10%, or an increase of 10% on the Bitcoin, and then you'll see a lot of the altcoins that will do two, three, four times the amount of that correction or that increase. But in terms of timing, you will notice, and if you haven't noticed that, believe me, I've been studying that for a while. There's a good correlation. At least that's the correlation that holds. The market, it might change with time. We know that correlation also evolve with time, but at this stage, I think it's a pretty good bet to start your analysis on that. So let me just basically go on the weekly chart on the Bitcoin, and the analysis is as follows. Right now we've made the major high at around $65,000. That was back in April, and we had the major washout of the market. We found some major support in that area. Okay, this area, which basically would be roughly 38 to 31,000. And yes, it is a wide area, but again, there are not. It's very difficult to pinpoint the exact price at which Bitcoin or Ethereum or any of the alts will stop or find support, etc. You can define with pretty good um, you can define a pretty good and decent area in which basically the market will have to react, where you will have to time your entry, and that's basically what I do. So this was the major area that we hit back in May, and we had like the big bounce and the Bitcoin. Then towards the end of June, we had another drop of the market where we found again a sort of double bottom. I mean, there was some definitely stop hunting, and took some guys out that had like some stops that were too close to double bottom. But again, the area that we respected as support was held pretty well. And then we finally had, from the beginning of mid-July, end of July, the big bounce that took us back to this red area, which is, the area roughly between, say, 55,000 and 60,000. So about $5,000 range on the Bitcoin. These are my big areas of weekly support and resistance. And that's where we've been trading right now. As an intermediate area of resistance right now, we've got this other red box here, which is basically roughly, say, 45, 48, a $3, a $3,000 range on the Bitcoin. And right now, that's where we are. Um, I believe that we are in a market which is going to be either rangy, or we're going to try to retest at least the top of that green box, if not basically the bottom of the green box, which corresponds to the lows we've seen between May and July. Um, at this stage, unless the market basically is able to really go above the EMA 10 on the weeklies here, this is the light blue, or the 20, I feel that the price is going to basically be capped by this sort of area, and this small red box. So again, 45, 48 is the range. That's where we've seen most of the volume happening within that big jump from end of July, and that's where I reckon that the market is going to stall. If we don't get very quickly, and I know that September is always, I mean, historically been a bad month for crypto, for Bitcoins. Um, we're coming out of September, maybe we'll have the November move, and we'll start basically rallying up to the whole highs. At this stage, I still feel that the market will try to retest either the top of that box around 38,000, or the bottom around the 29, 30,000. That's where I stand at the moment. That's where I put my money on, and that's why I haven't been really involved in the crypto. I've been on the sidelines. I've really basically started getting cash from I'd say the second half of August, beginning of September. I'd say the last week, couple of weeks of August, first week of September, that's when basically I really got out of most of my position on the altcoins. And that day, that the big that we had on 7th of September, I had some trading stuff that got triggered, and that took me out on most of the position that I had. So right now, I'm mostly cash. I'm waiting for some areas to hit, some of my bids. I'm kind of working some bids below the market. We're still far. I would say equivalent again, and the Bitcoin would be anywhere between, that green area, that green box I've just told you about, and that's why I've got my bids. So right now, I'm patiently waiting for it to to develop. But I'd say that I will start getting interested if we can see this market trading above that area, and certainly above the $48,000 on the Bitcoin. Okay, I just want to turn to the weekly as well. So the daily. You'll have a better picture also looking at the daily, and again, I've got the conversions of all my major EMAs, moving average, that I'm following up. Again, we've been kind of like trending in and ranging with it, that basically conversions of VMAs, and we've got just above our head this red box that I was telling you about, between 45 and 48. Um, I still believe that the next move is going to be on the way down. And the reason why I kind of like think of that way is that I'm looking at general volume figures. I'm looking at this index, which is the force index from Alexander Elder. If some of you guys are familiar with it, we've had all along that big increase, the Bitcoin, the FI, the force index that kept on basically making on. We had like a massive divergence, bearish divergence that was basically setting up. If you look at these levels where we hit, we were very close to that upper resistance box that I was telling you about on the weeklies. But also, if you were looking at some Fibonacci numbers, we really came in with a few uh, maybe like a few $100s to the top of that. And then we had that big reaction of the market, big liquidation day on the 7th of September that we've all seen. Um, but looking at basically what the force index is showing at this stage, and looking at, generally speaking, the open interest of futures contracts throughout all the major platforms and futures exchanges, I'm not seeing basically some of the institutionals going back in this market and building up position again. I think that these guys, they're kind of like either playing games or waiting for the market to drop one last time. And I think that this is going to be the big area where we're going to have definitely loads of beats, lots of guys interested to go back in the market. If the news that we've heard about over the next the past few days, out of the AICC and out of basically the ETF possibility of letting these ETF being listed on the cryptos, being Bitcoin, Ethereum, or all sorts of basically altcoins that will be issued in an ETF format. Definitely, yeah, that will be good for the market because that means that this ETF will have funding, and this funding will have to basically go back in the markets at some stage. Depending on the timing of this ETF and depending on how what sort of appetite we get from the institutional side of the market, then we'll see a reaction or not. But from the retail side of the market, the retail investors like you and I, all I can see is basically the whole pattern. The HODL, sorry, type of the whole pattern. I'm long, buy the dip, buy the dip, buy the dip. The problem is that what I've never thought that buy the dip is a strategy in itself. I don't think it's a strategy in itself at all. I think it's basically a strategy. It is not strategy. A strategy is basically where you come in, where you're supposed to go out, whether you make money or whether you lose money. That's the strategy. The HODL HODL strategy is not a strategy at all. It's basically, you know, it's great when the market keeps on going up and up and up and up, and you buy the dip until basically it doesn't work anymore, and then you get crushed. And we've seen that beginning of April, May, in that market where that got decimated 55% on the Bitcoin, and even more in some of the other altcoins. Some of the other altcoins, lost 70, 80% of their value from the top of April, May. So the whole strategy is not a strategy. You need to basically measure your risk. You need to know exactly how much you're prepared to lose. But when I go through all the social medias, all the major Facebook crypto groups, et cetera, et cetera, et cetera, I mean, all I can see is the same attitude. Hold it, hold it, hold it. I'm sorry, this is not trading. This is not even investing for me. You have to have a measure of risk, measuring this risk, and have a real trade management that you follow. How you come in that market and where you get out. And if you guys will, take it a moment, maybe I'll post my Twitter feed and or my Facebook. You can go through my timeline. You will see the way that I trade this position. I mean, I always basically take advantage of the fear and greed of the market, and especially the fear in these moments where that's where you need to pick up paper. You need to pick up the coins. You need to basically be aggressive on the size. You also need to have an invalidation point at which basically you'll be out. but you need to also have a plan on when you're gonna go out. And on my Twitter or my Facebook page, you will notice that I have a trade management, and I will follow that trade management and that basically that exit plan all along, so that I pay myself on the way up. It's not about basically, oh, I believe that, Bitcoin can go to $500,000. It might even go to $1 million. I'm a believer that, it could happen one day. I'm not in disbelief of that. What I'm in disbelief is that, in between that, there will be a lot of amplitude and there will be a lot of big moves that you can either catch or not. Some of these big whales out there, some of the guys that really control the market with the massive size, they decide when they get out and they decide when they come back in. And if you look at the overall market on the weekly, when we've basically gone from the September 2020 and we were trading around the 10, $12,000 all the way to 65,000. If you think that these guys they made only this increase of 500%, you're wrong. They've been trading that. They decided that around 40, $42,000 would be a temporary top. They basically got rid of that and they started buying again. And same here. Every time you see those major tops and those major sport areas, these are basically controlled by the big whales. So these guys haven't done 500%. No, they've been in and out, in and out, in and out. And every time they decide, they set the floor on the market, and that's why they do a lot more than 500%. Even though that's that's the performance of the Bitcoin from September 2020 till the recent high that we've seen in 2021. So, all these signs that I'm seeing in the market right now, looking at the dailies, looking at the force index, looking at the open interest and the futures exchange, um, don't basically give me the picture of a market that's ready to turn up massively. And if anything, I would say that they will probably try to bring it down again to that sort of level, to that green box. So that's how I'm going to play it. I don't want to make too much of a long video. Um, I'll probably look at the Ethereum as well. I'll post it, but the analysis will be very much the same. They will be along the same lines because, like I said to you, Ethereum, Bitcoins, they're the majors. They dictate what the rest of the market is going to go for the next few weeks or few months. And as long as basically we have a pretty good strategy and idea of where the majors are going, then we have a pretty good idea of where we should be for some of the other projects that we like best, some of the other projects that will outperform the move that we'll see in the Bitcoin on the way up or underperform on the way down. All right. So if you like it, guys, that's again, like I said, that's my first video on TradingView. I'd appreciate your comments. I would appreciate your feedback. If some of you guys like it, I'll be entitled to do some more in the near future. And that's it. All right. So take care. Trade safely. Like I said, always HODL, hodl strategy is not a strategy. You have to have your risk parameters. You have to know exactly how much you get in the market, how much you're willing to risk. I really discourage you to basically trade any leverage out there. And I know that, again, looking at all these retail platforms, there's way too much leverage that's being given to us. There's way too many people that are using this leverage without understanding the level of risk that they undertake. So, if you take leverage, you can take leverage, but basically keep it like really small. 2-3 times your equity. That will be already plenty. And always basically have your invalidation point, your stop loss out there, where you know that your trade has gone wrong. Don't basically get into that mentality, oh, you know what, I've become an investor because now it's gone against me. You'll know that the trade has gone bad because from the moment where the price is under your entry price, then that's when the trade has gone wrong. All right, guys. So take care, and please, exchange any ideas, comments. I'll be glad to answer any of your comments. So yeah,